Good evening and welcome to Equity News on EquityAxis. Thank you for joining us as we come to you live from our Hampton studios in the capital. I am Rombedzai Goredema. Government has partnered with the Reconstruction Fund and the World Bank today in launching the Public Entities Act at an event in the capital. The launch was attended by various stakeholders in the private and public sectors of the economy. The Act is meant to frame and remodel corporate governance in state-owned enterprises toward operational efficiencies. The Minister of Finance said the new Act was an indication of government's commitment to economic recovery. Our team was on the ground. Let's have a listen.
It came into effect on the 8th of June 2018. It is indeed a great privilege and honor for me to stand before such an august lineup of distinguished and esteemed guests to officially launch a rather ambitious and game-changing initiative aimed at addressing governance and performance concerns within our parastatals. The background to this act is that state enterprises and parastatals, this is SEPs for short, which are government entities that operate in over 50% of the sectors of the economy. They are in water, energy, infrastructure, transport, and education, among other sectors, and they used to contribute over 40% to the country's GDP in the 1990s. GDP meaning gross domestic product. As the years went by, the public entities' performance dropped to such an extent that, as of now, they are only contributing less than 10% to GDP. They dropped from 40% in the 90s to 10% in the recent years. Studies conducted showed that the misgovernance took over, showed that misgovernance took over, and some of the mischief led to the poor performance of the entities. I'm sure you're all aware of some of the cases that were widely publicized in the media. Even today, we still have entities that still come to terms with the need for good corporate governance. The new dispensation of the Second Republic requires state enterprise SEPs, some of whom remain key enablers to businesses, as well as both domestic and foreign investment, to play a pivotal role towards the realization of Vision 2030's aspiration of the upper middle-income economy in an empowered society. It is no secret.
The World Bank Governance Manager, Ms. Nicole Smithers, said while the Act was a great initiative, much depends upon its implementation. Let's listen in.
And then thirdly, leadership. Particularly here referring to the professionalisation of the SOE boards and the board leadership that is provided to the overall direction of the SOEs. Appointments should be determined by skill and experience rather than by other factors, and there's a need for an appropriate balance around the remuneration of SOE board members. I'd like to now move on to Latin America and the Caribbean, where there has been a long period of privatisation and corporate governance. But this experience points to a number of key challenges which were not given perhaps the necessary attention during the earlier phases of that reform in the region. This picks up on and moves into the questions of management, so within the state-owned enterprises, and the professionalisation of SOE management. Further, there's critical issue around monitoring and evaluation. Monitoring both of the performance of the SOEs and the results of the SOEs and the benefits that are being achieved through the SOEs.
INVICTUS Energy says it has completed a placement to raise $1.5 million through rights issue as it seeks partners in the proposed oil project in Muzarabani. In a quarterly update for the period ending 30 September 2019, The mining company announced that it had received strong interest from the exploration and production companies as well as private equity investors seeking to partner it in the proposed Muzarabani oil project. The Muzarabani prospect is estimated to contain 250 million barrels of conventional gas across 5 horizons, while the Musasa project, identified under the same payment, is estimated to contain 44 million barrels of conventional gas across 3 horizons. Following a poor performance in the first quarter, Innscor says sales volumes are slightly improving month on month. Innscor, which shares 7 of its largest shareholdings with Simbisa Brands Limited, recorded low volume consumption on most of its product lines in the first quarter. Speaking at the AGM earlier today, the group CEO, Julian Skonken, said the current conditions allow for export to commence, and the group has commenced work on building an export market. Let's hear him speak.
Extensive quarter 1 trading update last month. There are no major changes from what has previously been communicated. Slight volume improvements continuing to be recorded on a month-on-month basis. As a business, we continue to focus on ensuring that our trading models adapt to the current market conditions and that we achieve the necessary real balance sheet growth. That's the extent of the update, Mr. Chairman. Thank you. An extensive quarter 1 export market. Yes, predominantly the group has been Zimbabwe-centric, as you've pointed out in its past. I think the current conditions do allow for exports to commence. So I would say that in most of the operations, there are some exports that are now taking place. Obviously, it does take time to build up your export markets, and that's the process that we're going through at the moment. So yes, exports are commencing, albeit in a small way at this point in time. And obviously, our aim to try and increase that export market.
The RBZ has announced that the total bids for the 8th issue of 272-day treasury bills worth 300 million Zimbabwean dollars amounted to 30 million Zimbabwean dollars. Government rejected all the bids where the highest rate was 15.5% and the lowest 15%. In the 2020 budget presentation, government projected that month-on-month inflation will come off to 10%. Subscription by the market has also been low, as indicated by the 10% uptake in the recent issue. Since the first issue in late July, there has been a decline in yields in the uptake of treasury bills. Cumulatively, treasury bills are now worth $1.54 billion since the first issue. And in our final story, World Food Program says it needs $300 million to double the number of Zimbabweans needing aid to 4.1 million. The organization says a climate disaster and economic meltdown were to blame for the crisis. According to a recent report by the United Nations, more than 7 million people in the country are food insecure. That's all we had for you for tonight. Thank you for watching, and don't forget to like, subscribe, follow us on Twitter and Facebook, and to visit our website www.EquityAxis.net. From the EquityAxis team and I, good evening.
climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.